I've seen a lot. Amid the celebrity allure of entrepreneurship, many exceptional entrepreneurs remain shadowed. Here, I team up with these hidden talents to unveil their challenges and successes. Dive in with me to unearth entrepreneurial gems, learn from our experiences, and get educated. Andy Pancholi, welcome to the podcast. Brother, I'm so grateful for you to be here. I was actually coming home to, I just wanted to share this with you because, and I didn't mention it on the pre-conversation that we just had, but I was traveling home to the home studio here, and I had this moment of really deep gratitude for, having you. I was so looking forward to having you on the show. And then this moment of just deep gratitude for all the friends and people that have been on the show and that I'm so grateful for, that are just so intelligent and so smart and so willing to give their time to share story and help our listeners. And I just wanted to say, knowing that I was going to have this conversation with you today brought on that real flood of gratitude. So just because you're such an amazing human being. So welcome to the show.
Dwayne, well, thank you. And let me throw that right back at you as well, because we go back a good way, a good long way, and it's always been like that. Maybe we'll mention the first time we met.
In the gym, pumping iron. I'm going to share with the audience a little bit about you. I probably need I think I might need some oxygen. I was telling Heather, our producer, I might need some oxygen to get through this one. But I'm just going to share with them a little bit, and then we'll go through it and dice it and slice it up. But you're the creator of it's called the Market Timing Report. And full disclosure to the audience, I have subscribed to it. I used to use it when I traded. I thought it was amazing. I don't trade anymore, so I don't really need to use it, but it's a fantastic product. And it's going to be a lot of what we talk about, but you're also a best-selling author for a book called 0 Hour that I think you co-wrote it with Harry Dent. And then you are a senior training officer for British Airways with the wide-bodied jets. And then I have a blank line, for, some top secret activities that you do that we can't talk about because you'll probably go to jail if I mention it. I guess I could mention it. You can't mention it, but maybe I could. But for the, top secret stuff that you do for the British government, which I think the reason why I mention it is it really lends to your experience on the risk management side of life and different activities and occurrences. But in the Market Timing Report, you use cycles, which we will talk about for the audience. We'll slice and dice that up. But you have forewarned the pandemic. You did that in 2018, almost 2 years before it happened. You forewarned the 2020 crash just after the pandemic. You timed the 2022 top. You have foretold the 2000 highs back in the year 2000, the 07-08 financial crisis, the commodity boom of 08 and 2010. You use mathematical cycles and have predicted the Ukraine, the Russian invasion of Ukraine, the Hamas-Israeli conflict to the exact date. You work with some of the largest banks and institutions, financial institutions around the world as a consultant, and you advise government agencies and military on some of these cycles. You sit on the board of the Foundation for the Study of Cycles. How'd I do?
Well, I didn't really realize I did that sort of stuff, but yeah, I guess I do. Yeah. It's fascinating, right? So let me give you an overview. Is that basically I've been researching this for over 30 years. I know you're thinking he doesn't even look that old, but no.
I didn't put you over 43, bro.
The whole idea is that there is mathematical order in human behavior and the universe. And now we're at the point where we're able to prove some of this by projecting forward. And I think that's the premise, be it in markets or human behavior. And that's the big one, So, I'm passionate about this. We've spent a fortune programming all this stuff. and we now have a predictive capability, which most people don't believe. But yeah, let me throw it back to you. Where do you want to start with this? Where do you want to take it?
I'll say, like, when I first heard of what you did, and I went, come on, like, really? Like, isn't that like, you know, the moon cycles and stuff? And like, I just didn't, and that was just like absolute ignorance on my part. But I couldn't get, I just couldn't get my head around it because I didn't understand it. So can you maybe just give, the listener a little bit of background? Because, you made it, I think, a significant statement right there at the beginning, which is like, there's a mathematical order. And I loved how you said it, a mathematical order to, human behavior, politics, financial markets, all that kind of stuff. And so I really would love to just, if we could dig in a little bit to what cycles are and how they are, how you kind of work them.
Okay, well, let's start with what a cycle is. It's just a repetition of a time period. It doesn't even have to be a set time period. Let's stick to the set time periods, though, just to make life easy. And maybe the easy way to start off with this is that we all have a birthday every year. So that's a simple cycle. We come back around to that. But what we also see is that when people look at markets and, you look at the financial TV shows and everything's all about hype, and nobody looks back very far. And whether it's the good book, the Bible, or whether it's other religious texts or authoritative documents, they all talk about how life repeats, and there is no new thing under the sun. This idea, so all this stuff is veiled knowledge, supposedly. I mean, it's there for the unlocking. But let's give you an example. So we talked about, most people will be familiar historically about the 1929 crash, right? I think everybody's heard of that, the Wall Street crash, which actually went around the world. It crashed all the markets. And the idea was, if you look back 90 years before that, this is the research I've been doing for the last 30 plus years, you'll see that when we got to 1837 to 1842, that was the biggest financial collapse ever in America. What happened there was that there'd been the banks had opened up, credit was cheap, and there was this huge expansion around Chicago, and the canals were all being expanded so people could get the grains, the wheat and corn through the waterways into the Great Lakes, up the St. Lawrence Seaway, and out into the rest of the world. Credit was cheap, and suddenly it was boom and bust. 90 years later, 1929, 3rd of September, we got the high at 386, and the market crashed all the way down to 46, 90% decline. So this was kind of interesting. So projecting on from that suggested 2019 would see a crash. If you add 90 years to 2020 to 1929. So we were kind of on alert for this, and it actually came in 6 weeks into the next year, which coincided with the pandemic. Okay, so hold that thought there. Now, the reason we were looking for a pandemic was that, believe it or not, when I started researching this about 8-10 years ago, pandemics seem to occur in big style every 100 years, round about the beginning of the about the year 20 in each century. So if we go back to, say, 1920, 1918, we had the Spanish flu, which was the post-war pandemic. And the reason it was called the Spanish flu was Spain was the only country talking about it. This is the post-First World War. No other country wanted to say they had flu because they didn't want the others to think that their armies were being affected by this. So we had this Spanish flu, which started in 1918. And the amount of time the Spanish flu lasted in terms of years, months, and weeks was exactly the same as pretty much the COVID pandemic. And I didn't, that was something that was crazy. But you can go back to 1820, and we had the first cholera pandemic, right? And this started off in Asia, Russia, moved all the way across Europe. That killed tens of millions of people. Then you can go back to 1720 and 1620, and there were two smallpox pandemics within northeastern United States. Well, there wouldn't be the United States here, but within northeastern America, because and a lot of the First Nation people, including the family of Pocahontas, were all wiped out with this. Now, I mean, there is some theory that it was deliberately introduced to wipe out people, but the whole point is that these pandemics took place, and then whenever we look at a cycle, we can come to the midpoint. So if it's a 100-year cycle, we look at the 50, the 50-year point. And if you go back, to say, 1618 to 1620, and you add 50 years to that, that takes you to the Great Plague in Britain, and the more I looked at this, it was just exact. These things are like clockwork. And then, we mentioned the 90-year cycle. Well, so what we saw was the pandemic cycle was kind of aligning with the stock market cycle. Do you see what I mean there? The 90. Sorry, we've gone in at the deep end. I'm very geeky about this. I love all this stuff, but there's a presentation that I give. I think it's on our YouTube channel as well. You can see that, go into more depth there. But if we took the midpoints of the 90-year cycle, and then you look at 1884. So remember, we're talking about 1839, 1929. The midpoint of that saw a big crash in America. But move forward from 1929, add 45 years, you get to 1974. And people, I actually remember this because I was about it, albeit as a young teenager. We had the OPEC oil crisis, right, in 1973, 74. So, in fact, So what happened there was, we got a massive crash in the markets. That was the major low from where we've moved up from ever since. And this was a critical part, and it was all to do with control of oil, and it was all about the Arab nations wanting to sort of take on America. So it brought America down to its knees because America was a net importer of oil. And those of you who are a little older will remember there was a 50-mile-an-hour speed limit introduced at that point on your freeways and interstates. So that was that. But let me just show you how this incredible mathematical web weaves in. We talked about the 100-year cycle with the pandemic. So half of that is 50 years. And we went over to, we were talking about the OPEC oil crisis in 1973. Well, the result of that was the outbreak of war, the Yom Kippur War. And 50 years on from that to the week is when the Hamas-Israeli thing started last year. In fact, it's actually a year this week. In fact, it's going to be a year this weekend that this started. So do you see how this is all meshing together? And please don't switch off at this point. Maybe I've blown your brains already. I'm sorry, I can't help it. It's late here in England tonight. I'm so excited to hang with you, Dwayne. But that's an overview. Let's cool it off a little bit. The other thing was that actually, that 45-year cycle in oil, when we got to early 2020, oil went into negative territory for the first time ever on a futures contract. Some people will remember that. And that was exactly 45 years on from the crisis point there as well.
Okay, so I'm just going to kind of overview this, and please correct me if I'm wrong. So they're the larger cycles. So, there's the pandemic cycle, which is a 100-year cycle. There's a financial cycle, which is a 90-year cycle. And then you can take a midpoint cycle from both of those. And does every cycle have a midpoint cycle? And earlier, like you had made a comment about, and so this relates, I guess, to, which I find this stuff like, it's like you can really kind of geek out into this stuff, excuse the saying, but it's like, it's so fascinating that when you start to draw these conclusions and draw the timeline, which I'm doing right now as we're talking. But you also said like there's this mathematical order and it in human behavior. So I'm just curious, just to bring this in for the listener. What is it human behavior that is it a human behavior cycle that causes some of these things, or is it a financial cycle that causes the human behavior? Like that's kind of the question that's kind of rolling in my head right now, and I'm.
Oh my, right. Let's take the interesting version. So humans are generally driven by hope, fear, and greed. Okay, and these are the motivators. Now, hold that thought. Now, one of the reasons that a lot of these cycles have been deciphered through markets is if I said to you, Dwayne, what happened to you on the 18th of September, 2004, unless something really important like there was a birth or a death or a big event, you probably don't remember how you were on that day. You don't know if you woke up feeling great, you had an awesome day, and you went to bed feeling really happy. Or you got up, it was an okay morning, it was a bad afternoon, and you finished flat. So if you look at this for every day, if you take the chart of a market, so for those of you who are traders who know how to read a chart, you'll see the price for each day either goes up or down or sideways, right? And you can see what it did throughout the day. Well, that is a measurement of the sentiment of that market. Does that make sense? And in the
No.
same
Yep.
way, like I was saying to you, I was up in London yesterday doing some deals and things and working with various people. Had a very interesting dinner last night, and we had a bit of a blast. We let our hair down with what little we both got. So and that was a day where we started. We worked hard all day, and we probably closed on a high with that last bottle of scotch or whatever. And that was an up day, right? And today's been another up day. Here I am in the evening here, and so on. But sometimes you get up, nothing goes right, etc. So what tends to happen is that what we're saying is each bar chart in itself in a market gives you the sentiment for the day. But then you can look and say, well, actually, the I don't know, the soybean market, the oil market, the bond market, the stock market. It's been trending up for 3 months. Well, you know what it's like. You meet somebody, you fall in love, and you have all these like months of hey, everything's wonderful, and then sometimes you have tough times as well when things don't work out. It might be health issues, family issues, relationship issues. So this is the equivalent of a personal human bull or bear market. Does this make sense now?
Oh yeah, no, it reminds me of my a chart of my blood pressure when you're operating a business.
Right. So, like, hey, we're on a run. We're expanding. The revenue's coming in. The overheads are going down. Oh, something's just happened. The government just did this. Oh, we're going to have to deal with this. So we've got a lawyer on our back. And that's exactly it.
Mhm.
And all these things. So what I'm saying is that by analyzing markets where we've got hard, objective data, you can see percentages. You can suddenly see that these patterns are unfolding. And we started off with the 90-year and the 100-year cycle and took the midpoints, but there are much smaller cycles. There's the annual cycle and so on, the birthday cycle. And by the time you weave all these together, that's why you get these people saying, well, markets are random because they can't see through the noise. Okay. You can't see the wood for the trees. And, that kind of works for us because we want people to think that because it gives us an edge with everything we do. But there are war cycles as well, and there are a couple of there's several different numbers, but they are set that we found, and they in themselves they are very very accurate, and we are in those war cycles now, So, but let's stick to the original point. I'll let you drive this because I'm pretty good at going off down different tangents and.
Well, I might join you with those. So, because my next question was going to be, what's the war cycle? But
Yeah,
I
we can
mean,
do that. We can do that if you want. Yeah.
well, it's interesting. I had one other question ahead of that, which was like, as you were describing it, and my comment was, and it was I was trying to be funny, probably wasn't funny, but was trying to be funny, which was, looks like my blood pressure, but then, and then you kind of said, well, you get a letter from a lawyer, and it's like, it's so true. Like you could run, several days in your business, or weeks where, the tide is high, everything is awesome. It feels like you can't do anything wrong. And then, I think there's a couple things here. One, it's just like the realization when you said, oh, you get a lawyer letter, and it's like, oh no, all of a sudden a lawyer letter, you know, gives you a down day, or it could give you a massively down day, which in a stock chart would show a big red candle. But in our life, it can show a big red candle. And it's kind of just interesting to me that, what, and I'm not saying we should talk about this right now, but I'd be interested if, and you made the other comment you made, which kind of solidified my thought on this, which was sometimes you can't see the forest for the trees. And if you could, I'd be curious if you could ever track your own cycles, beyond your birthday, but, your own emotional cycles, your own financial cycles, your own, anyways, that was a thought that I had. I'm not saying we should go down that road, but whatever.
Now let's talk about it. It's an interesting one. So if any of you here again, everything I'm going to do is pretty much reference back to markets or war cycles. But if you think about, if you are traders, you might have heard of the decennial cycle, the 10-year pattern in Western stock markets. And what tends to happen is the first 2-3 years of a decade. This is first written about by a guy in a book called Tides in the Affairs of Man. And he wrote that in 1939. He only looked at about 50 years of Dow data at that point. And but it's proven to be true. So the idea is the first few years of a decade are pretty slow, really, usually. And then they build up. And then there's a bit of a bull market in year 5. 6 is pretty interesting, carries on up. Year 7 often see crashes, right? So, like 2007, the global financial crisis, 1987, years ending in 7 see a crash, and then 8 and 9, years ending in 9 and 0 tend to take you all the way up to major highs. So this is a 10-year pattern that, and if you traded that, you'd do very well, just doing that. So what I did, this was, I'm going to be corny and say 10 years, it was more than that. It's probably actually 20 years ago. I actually mapped my life out into decades, and I saw some really weird patterns coming out that were kind of uncanny. Things like you might want to plot things like, well, it's up to you, but you have to show your business successes, your business failures, your relationships, your children, your family, your loved ones, your financial wins and losses, and so on. And suddenly they were kind of falling into clusters when you aligned these different decades. And I thought this was pretty uncanny. So there is something there, in these 10-year cycles, 100-year cycles, etc. There's definitely something there. And of course, see, us humans, just say we live to, I don't know, what do we live to? We used to say 80 years, but people live longer than that.
And 90
So
or
we're
100
just,
now.
yeah, exactly. 100's not uncommon, right? But what is it? That's our time span. But in the lore of 10,000-year cycles, we're kind of a little fly or a flea or something. We're tiny little things. So we can only understand the concept of what's within our own time spans, right? And this is where it got really interesting 20, 30 years ago when I started looking back at the long-term stuff. Human behavior repeats in patterns that are way beyond your own lifespan. That's the crazy thing. And I don't know why it works, but it just seems to work. So,
Yeah.
yeah. So,
So
in answer to your question, that's how you can plot your own life. Yeah. Look at 10-year patterns, overlay them.
need to build an AI to see if you could break that down to a monthly. It'd be interesting to see.
Oh, you can. In fact, that's exactly what we did. That's exactly what we did. Yeah. And I got some of my researchers to do that, and it was a holy whatever, moly, whatever. Yeah. It's kind of,
Oh,
this is working. Yeah. Yeah.
oh, that's interesting. So what do you track on that? Like, is it?
On that one, I mean, that was just sort of seeing how elements in life repeat. But actually, this is probably the first time that we want to bring this in here, because I think if we talk on to how to use cycles in business, the idea is that actually, if you've got a time window coming up in your life where you've had changes in relationships, and it doesn't mean a relationship has to fail or anything. It just means like there's a change in that relationship. And it can mean when you're younger, we're less mature, so we don't know how to handle relationships as well. You've got to say, well, actually, all these cycles are aligning. And that's the whole point. It's where the cycles align, which is what happened with COVID, the China cycles, with the stock market cycles, or the pandemic cycles. But the idea in this smaller world, in your 10-year patterns, you might say, well, the mathematical patterns suggest that there might be something in terms of a relationship issue coming up. So, what have you learned from the past to help you navigate the future one in a better way? And that's it. That it's like, what have you learned, and how can you use this projection into the future to get a better outcome? And then we can talk about this, how you relate all these cycles to business and so on, as we go down the road here.
It's an interesting comment when you say that, because I remember when I went through my divorce, I had looked back and not with like exact data or anything like that. Like it wasn't like I was like pulling out a time chart and pointing the data points, whatnot. But I remember getting to this point going, it feels like every 3 years, like I'm going through a significant relationship. Like they last 3 years, and it's like it's to the point where actually back then I made a joke. It's like women are like leasing cars for me. I just every 3 years I seem to get into. Sorry, ladies, but it was just like obviously I'm making a joke about it, but I didn't. I took it very seriously actually, and it was very concerning to me. Because that's not what but I just, and yeah, to your point, I didn't know how to manage relationships, and I put a lot of work into that. But it's an interesting thought or concept where, so many people think they have bad luck. You hear that, it's just like, well, I'm just unlucky. It's like, are you? Maybe there's a cycle at play. It's an interesting concept that I've never even thought about, actually.
So I think this is pretty important actually to bring this in whilst we're talking about personal cycles, is that whilst the cycle might come in, it's your attitude. Like you said, maybe I'm unlucky. I think that's you've got to be positive about this, and you really got to know how to manage your consciousness and your mind, because two people can come across the same situation, but they'll have two different responses. One will probably have a negative response, or a less positive one, and one will have a positive one. And so mind is what overcomes these things. And it's like the pandemic. People, oh, it's terrible. Nobody. It was a black swan. Nobody saw it coming, and the others were kind of like, wow, that was the best time of my life. I reconnected with my family. I started a business from home, and I didn't have to go into that terrible job I don't like doing anymore. So the same event has different outcomes, and it's all about your mindset and consciousness levels, your subconscious, your self-conscious, the superconscious, everything. So this is a really important part that you need to put in together. And the point I'm really saying is that nothing is fated. You have free will in everything, despite the fact the cycles come. In fact, in the late '90s, I wrote for a mainstream newspaper, Sunday paper here in Britain, and I just wrote 6 weeks worth of columns, and they were asking about cycles. And one of the things was the way I addressed it was: say your task is to cross a minefield, okay? Would you rather do it with a map of the minefield or without a map of the minefield? All right. Well,
Right.
yeah, give me the map, right? But do you have free will to ignore that map and step on a mine if you felt so inclined? And the answer is yes. But if you're more diligent, you're going to use that map to navigate across. And therein lies the next thing, is that whilst you can you can take a horse to water, you can't make it drink, as it says. So this idea is that even if you show people the roadmap, they don't necessarily stick to it.
Yeah, no, well,
That's
and
human
because
behavior.
they don't self-impose the leverage. Like if they, considered it as a minefield, and you could blow your legs off or get killed, and worse. There's enough leverage there to say, hey, maybe I'll use this map. But most people go through their day without that self-imposed leverage to make them or entice them to take more deliberate action. It's like I always say, like people, I think fear is a good thing because it motivates me to avoid, the minefields that are going to blow my legs off.
Exactly. And I think this is a really important point to make about cycles. Nothing is fatalistic. That's it. It's you have free will. Yeah.
I mean, that's a really good point, and I do want to get back to it. I want to slip back to the 10-year cycle, but to your point about fatalistic, it's like so many people feel like, and this is one of the reasons why I wanted to have you on is, and I've got another gentleman coming on the podcast too to talk about like macroeconomics and all that kind of stuff, but so many people have this fatalistic outlook. If the Democrats win or if the Republicans win, what's going to happen in America? And I mean, we have it here in Canada. It's like just disregard where you fall from a political favor, on either side of those kinds of things. But there's so much contention and so much finality or fatalism towards what an outcome of one event will be. And I think that media plays on that. You can see it which I guess leads back to the original question, which is, do these cycles create events, and then does our media took the pandemic and just exploded the shit out of it, in my opinion.
Yeah. Yeah. So, well, I mean, there's two ways of answering this question. One of the ways is that I've looked at some cycles work on US elections, which we can talk about. Um, that's one way of looking at it. The other thing is, of course, it's hope, fear, and greed. It's like, okay, well, if party X gets in, that's better for me. If party Y gets in, it's better for me, or whatever. And then the whole thing is driven by that. Um, but what I found was, as there's order and everything, that there are several different sets of cycles, and there's a 144-year cycle, which is 12 times 12. So, if you want to go into the the religious texts again. You've got 12 tribes of Israel and all the rest of it. And from the biblical viewpoint, if you go into the Vedic system, so the system that predates Hinduism and so on, they talk about these numbers as well. And so that's a cycle that you'll often find repeating, and it also works in commodity markets. The 144-year cycle for the last election took us back to 1876. And in 1876, they had the most contentious election where the Democrats felt the Republicans had stolen the election because basically what had happened there was they felt the votes were in favor of one party, but a judge ruled against them, and therefore the Rutherford B. Hayes ended up as president, and he beat Samuel Tilden. And they spent the next 4 years, the opposition spent the next 4 years, the Democrats, the next 4 years saying, we were robbed, we were robbed. Well, what's just happened in America? They've spent the last 4 years, But what happened? So forget about that. That's history now. Now, and I'm doing this as an apolitical observer. I'm not taking any sides here. I know people have different belief systems, and I really have to be neutral with this. But if we go back to 1880, which will be 140 years ago, well, guess what? We had the tightest ever American election. I'm just looking at the numbers here. James Garfield beat a guy called Hancock 48.3% to 48.2% in the vote. And it was the highest ever turnout for a vote ever. All right. So that was pretty interesting. And one of the things that was a big topical thing was immigration. And in this case, it was Chinese immigration. So, you can see how this immigration thing comes in all the time again. But here's the twist. So let me just take the presidential thing down the line, right? 120 days after getting into office, Garfield was shot, and he died on his 200th day in office. So these are kind of like interesting numbers playing out, in terms of number patterns. So he died. So what are we saying? Are we saying that this roadmap for whoever wins is going to be pretty rocky? There might even be we've already had assassination attempts on Donald Trump. I don't know who's going to do this. Then we have something else going on. Whilst we talk about these super long-term cycles, and there's only so much we can cover on a podcast, we've worked on literally hundreds of cycles that we've programmed, and the smaller cycles that suggest aggression. One of the things I've mentioned is that I talked to various equivalent of federal agencies about sort of civil unrest patterns and so on. Well, the American election is seeing a civil unrest cycle peak on the day of the election. So when we come to the 5th of November, it's going to get really interesting. Then there's a further peak. So we get these peaks. There's a further cycle peak the first week of January. Well, that's going to be the 4-year anniversary of whatever happened at the Capitol. Depending on who I speak to, the officials let everybody in, or that the Capitol was stormed. Again, I'm apolitical. I don't know what happened. I wasn't there. And something happened at a Capitol. We know that, right?
Right.
That's going to be the 4-year anniversary, and it's a civil unrest cycle. So what's going to happen? Something's going to happen at the election. People are not going to be happy as we run up to the inauguration at the beginning of January. The inauguration is going to be at the back end of January. And then there's a further cycle peak round about the back end of April where there's going to be a degree of resolution. So this is getting really interesting. So if we want to connect the dots, what are we saying? There's going to be a party that's not going to be very happy. I say party, I don't mean a political party. There's going to be a group of people, a demographic that's very unhappy around about the first week of January. And, if one possible thing is maybe the Democrats get it, Kamala gets it, and the Trump side of it says it's all been a fix, and there's another further repeat of whatever you want to call it, insurrection by one party or just unrest or uncertainty, and that resolves there. So working these cycles, you can get an idea of what's going to happen. But the war cycles are coming in right now. And I wrote about this 10 days ago. And since then, we've seen a real escalation in what's happening in Israel, between Iran, and it's drawing in all the other Middle Eastern countries. Now, there is a much bigger cycle that this coincides with. But let's stick with this story right now. This is going to peak next week. So we're recording this on the 4th of October, around about 10th or the second week let's say the 9th to the 20th of October, seeing some really interesting cycles. Um, so that suggests a real big escalation. And the wildest card here is that what if America does join the war, vicariously, or backs people? And what if the Brits come in with them? And what about, the NATO nations? Then we've got a bit of a world war going. And then is it possible that the election might even be postponed or cancelled? I don't know. That's an extreme thought, right?
Ooh, that's extreme,
That's
bro.
an extreme one, right? But it's not
The
impossible.
shit would hit the fan, I think, if that was the case.
Absolutely. I've been very careful with my language so far. So, yeah. But you can't count sick because we got a zoomed in camera here. But I've got the Constitution there on the wall, and you look at that. There are times when you can avoid an election due to extreme measures. If you read that, so this is a kind of really exciting time. What are we saying? It's not going to be a straightforward election. That's what we're saying. It's
Right.
going to be contentious, and the 1880 pattern shows that as well. It's going to be close.
So I just want to kind of dissect this a little bit. I've got actually a lot of questions. I had questions around the 144-year cycle and the 12 by 12 and some of the history, which I actually find a little interesting in terms of the history from different cultures or different countries or continents where things have happened that kind of coincide with these cycles. But you just kind of made a comment from the 9th to the 20th, and I don't have the exact words, but you said from the 9th to the 20th, there's cycles at play. Those are my words. What are the different cycles? Like so far, I mean, there's the war cycle, the pandemic cycle, the 10-year decennial cycle. There's the 144-year cycle. Those are the ones that I've written down so far. But like, it sounds like there's so many cycles. Like, and how you determine which ones are significant, more significant, less significant, which ones may. I mean, like you specifically said, there's a war cycle, a pandemic cycle. Like, how do you kind of follow all this stuff?
Well, generically speaking, all those cycles you mentioned will apply to most things. War cycles are slightly different. So I wouldn't get too bogged down in this because we don't want people turning off if we get too mathematically inclined.
Yeah.
But let me just say that the 144-year cycle is an interesting one because if people would be familiar with the 1720, well, they might not be familiar. In the year 1720, there were a couple of big things happening. There was the South Sea bubble, which was like a huge there was like fake stock used, and it was inflated, and it was a Ponzi scheme, and it was like a Bernie Madoff type thing. But also at the same time in 1720, there was a guy called John Law. John Law, who was a Scottish economist who went over to France, and he convinced the very unpopular French monarchy that we could do all these bits and pieces and get the public support back. And one of the things here was that there was all this land in Louisiana that was the golden dream, and they all invested in this. And it was actually swampland around New Orleans. But what happened was there was this boom and bust. The Louisiana land crisis, the Mississippi land crisis, right, and the South Sea bubble. Two different major countries being involved in this. 1720, it was highly inflationary. Okay, at 144 years, we get to 1864. 1864, America is in the thick of the Civil War, and cotton, which had been trading at 3 cents a pound, suddenly went up to $1.84 a pound. It went up 60-fold in a matter of weeks. Okay, and it wasn't just cotton; it was wheat and corn. Well, what happened? Well, all your farmers and people that were out tilling the fields, making cotton in the South, they suddenly had to go to war. And what do you need if you go to war? You need a uniform. And what's it made from? It's made from cotton. So suddenly it's a classic supply and demand thing. And basically, there's not enough people making the cotton. Everybody wants cotton. And it went up 64. It came down pretty much as quick as it went up. But that was a big boom and bust. Say 23rd of August, 1864, cotton traded at $1.84. Now, that's 1864. At 144 years to that, you get to 2008. And we see actually one of the biggest commodity booms. We saw gold making new highs. We saw wheat, the grains, all sorts of commodities going up to a high in February 2008 and a secondary high a few months later. So that was that 144-year cycle. Why it works, I don't know. I haven't figured it out yet. I've got some ideas, but I don't want to put them out there till we've done a bit of testing on them. So you do get this sort of repetition, and you look at commodity prices. I mean, I sat on the board of the Foundation for the Study of Cycles. We've got some commodity prices going back a fair way, and you can see where these big events are coming. Now, half of the 144-year cycle is a 72-year cycle. So let's go back to 1929 and the stock market crash. What I'm really saying is that these cycles are interchangeable in different areas, right? So if you go back to 1929 and you go back 72 years, you get to 1857, and 1857 saw the next biggest it's the biggest meltdown of banks in America and Europe. Okay, so 1857, right? And I'm going to show you another match here. Maybe we should. I've got some slides on this. Maybe we should send them over to you. So 1857, add 72, 1929, add 72, 2001. That was the end of the 2000 to 2001 was the end of the dot-com bubble, right? The
Right.
dot-com, yeah. So when's the next one? 2073. Now there'll be some people watching this that are still going to be around there, and I joke saying, "Tell your grandkids," but we know 2073 is going to be big, right? Because if you're paying attention, we talked about the 100-year cycle. What happened in 1973? We had the OPEC oil crisis. Add 100 years, 2073. But on that note, let's go back to 1857. Sorry, I don't know if people are staying with me on this.
No,
I'm
it's, yeah, I mean,
boring you to death, right?
no, it's crazy, right? Like
Well, one of the things that we did predict in advance, which people didn't believe, was and this is related to what I've just said, the global financial crisis, 2007, 2008. When I first met you, actually, buddy.
Mhm.
So what happened? How do we predict that? Well, 1907 was the rich man's panic. Okay, basically the Knickerbocker crisis. Credit was suddenly dried up instantaneously. What happened in 2007? Credit dried up very quickly. The CDOs, the CDSs, the markets came crashing down. But what happened in 1807? People don't know this. The Napoleonic Wars were on, and America brought in the Embargo Act. America decided that if it stopped doing business with Europe, it would end the wars, the Napoleonic Wars. But in fact, it backfired. It just stopped American exports, and the American market in 1807 dropped by 80%. So 1807 Embargo Act, 1907 Rich Man's Crisis, 2007 Global Financial Crisis. Boom. Take the midpoints. Are you okay? Well, I'm not putting you to
Dude,
sleep here, man. You're rolling your eyes.
I'm blown away at the concurrence of events.
Well,
You
get
know,
this. Look, whilst I'm on a roll,
yeah,
1807 plus 50 years was 1857, which also fell in the 72-year cycle. Guys, rewind this if you're really into this. That's what we just talked about, the 72-year pattern, right? 1857 plus 50, because it's 50 is half of 100, right? 1907. 1957 was a secular bear market. Why? Because everybody that could afford an automobile had got one. Everybody that wanted a refrigerator had got one. Everybody that could afford a television had got one. And so there was a manufacturing downturn. So, this is how it happens. We got, then we had the rich man's panic, 1907. Who was brought in by I tell you, in 1907, at the rich man's panic, there was no Federal Reserve. The Treasury brought in a guy called J.P. Morgan to help resolve the situation. Who was in the thick of the global financial crisis, amongst others?
J.P. Morgan.
Right. When's the next one? 2057.
Which isn't really that far off. I
Not
mean,
now.
that's in the midlife of my son, right? My son is 22 right now.
Right. My daughter's 23, and my
Mm-hmm.
other son is 9. So
It's actually, I think, a little mind blowing at what else blows my mind is like how accurate you have been in predicting these things ahead of time. And so I guess maybe the question, because if I'm a listener right now, I'd be like, yeah, but okay, so what exactly are you predicting, or what? And I think you said earlier, it's like, so I'll maybe just throw that out as a question. Like, it's like, what are you predict? Like, for example, and I think, we could use, if it's okay with you, but October 9th to 20th, you feel like something is at play. There are cycles at play. What could that potentially look like from a minimum to a maximum? And then I guess the other question would be like, how does a retail investor trade it or guard from it or protect themselves from it? I have a million questions for you, actually, right?
All right,
So,
well, we can do them. I'm good. So we
yeah,
can, right? Um, so first of all, when we get these cycle event windows coming together, it's a window of I don't say opportunity. Well, it is a window of opportunity, but it's a window. It doesn't mean anything is going to happen. But for those of us that use cycles, we get prepared. Okay, that's the point where you want to be prepared for whatever cycle we're looking at. So you want to refer it directly to the markets. What I'm really saying is that we're going to see a degree of increased volatility. So if you are a trader, you want to make sure, first of all, every trader needs to really manage risk. And in fact, I was having this conversation with a tremendous lady who's become a very, very proficient trader. And and we were just talking only a few hours ago, and basically we were just saying, like, the previous focus had been on how much profit you can make, and I said, no, it's about how you protect your losses and how you lay yourselves open to risk. And of course, risk management with my other career as an airline captain is so important. And we'll bring this into it. So what are we saying is that this time window that I gave you, 9th to 20th, has got so many indicators, so many small cycles. So I break these cycles into harmonics all the way down. And that's what the market timing report's about. Uh, we reference this sort of stuff. So we're able to identify exact days. So let me just back out a little bit. A big event occurs when a series of cycles come together. So you've got a long-term cycle with a medium-term cycle with a short-term cycle. It's the wheel within the wheel within the wheel. So when you get three of them coming together, something's going to happen, three or
right.
more,
Yep.
right? So what we're saying is that in this case, we're getting a whole bunch of smaller cycles coming. It's not actually the wheel within the wheel within the wheel. It's just a volatility window. So you must manage your risk. So how are you managing your risk if you're an institutional portfolio manager, which is a role that I just stopped doing 2 years ago? We're running a professional hedge fund up there in on the northeast coast there. We had very strict rules for hedging the portfolios, right? But as a retail trader, people don't tend to, at a simple level, it's about putting stop losses in. At a more complex level, it's hedging with options or different contracts or so on, or different, and so on. So you got to protect your risk. And what we'd say is that during this next few weeks, you really want to be protecting your risk very carefully because there's a lot of wild cards about. So if we back out a little bit, rather than going in at the deep end there, where we have less number of cycles in an instrument, in a stock or an index or whatever it is, the appropriate commodity futures contract. If we can see a set of cycles here and a set of cycles here, then we know there's probably going to be a continuation of a trend between those two, and the relative risk of a people say black swan event. We don't believe in black swans. There's no such thing as a black swan. It's just a cycle somebody didn't spot, right?
Yep.
So the relative risk in between these 2 points is less compared to the risk at this point or this point, and that's something that a lot of hedge funds don't get. In fact, this is where this stuff is cutting edge. It's kind of like, because most people will have most big operations will have a pretty standard hedging operation going throughout this, and this is where you can optimize this sort of stuff. So answering your question is, you want to be careful the next 2 weeks. Well, you know what? Do you really have to trade? Probably not. You know, or make sure you're managing. You're doing your risk management in terms of what level of exposure you've got. The number of most retail traders are out of business within 6 to 8 months. Only 5% of them succeed. And I always talk about this and with the flying side of it. And I say, well, let's look at professions where they have a much bigger success rate. And I said, I'm happy to talk openly about flying, but I say, look, I happen to know a lot of pilots, and they've got 100% success rate, whereas trading's got a 5% success rate. What's the difference? And I said, out of all the pilots I know, they've got the same number of landings as takeoffs. Well, maybe apart from one guy I know. And I know you're a pilot, and a very established helicopter and fixed wing pilot, right? So,
Right. Yeah.
but the idea is, what can we learn from this group who manage risk to a really high level, and what can we learn from these people who are living on hope, fear, and greed, right? And no real risk management. So, that's where cycles give us a bit of an edge.
Got it. I have a whole bunch of questions about cycles. But I did have a previous question about your the three phrases: hope, fear, and greed. Can you just I'd love your opinion on what drives hope, what drives fear, what drives greed. I know you have a lot of experience in this area, and I'd love your insights. I'd love you to share, what you've seen over the years with it, whether it's an example from trading that people can use in their own personal lives or their own business, because I think that is a universal, bumper sticker for a lot of people. And I would love your thoughts on hope, fear, and greed.
Okay, so let's just go back to this idea of what happened on, I don't know, 9th of October, well, I should say 9th of May 2012 or 5th of January, 2004. We don't know. We don't know whether we woke up feeling great or had an up down day, right? So, hope. Let's start off with the happy one. Hope. Let's look at the Bitcoin boom and bust, right? So, hope is like, okay, somebody told me to get into this. It's a tip. This is where, it's like, oh, he knows something. Well, what's the human reaction here? It's FOMO, fear of missing out, right? The human behavioral condition. It's
Right.
FOMO. I better get in there, and I better have some of that. And it's kind of, it goes up a bit more. So this is what happened in 1720, right, with the South Sea bubble. This is what happened with Bitcoin, right? And this is a great example. I think I'll have some more. This is going up. Man, I'm going to be retired next week. Okay. And it goes up and up and up. And some people get out. But of course, it's going to go much further. It's going to go much further. And then boom, you lose it all and some, right? And that's hope, right? So it's a human behavioral thing. What's fueling it? It was a tip. It came from somebody else. It's a herd mentality, right? And it goes up and it's like, man, I'm going to get that new car. Man, I'm going to get a house now. I'm going to pay cash for my house. And it's gone up even more. I could retire. You know what? Just a couple more weeks and we're going to be like, we can have 10 houses. Okay, a little bit. It's
Right.
all
No,
FOMO.
no.
Now it's suddenly like, hope is amazing. And it's euphoria. It's euphoric. Well, the smart money's bailing out as you go out, right? They're kind of taking the money out. And then boom, everybody's hey, we're all down the bar, down the pub, we're having a blast. Look at us, we just made so much money. And this is saying, don't confuse brains with the bull market, right? Don't confuse brains with the bull market. So, people think they're really smart when they made all that money if they didn't understand where it was going.
Mm-hmm.
Then something happens. Let's look at, say, something like a pandemic. Or we could stay with Bitcoin. Bitcoin crashed, right? So what happened was that I'm going to get out now. I'm going to take some. Oh no, it's going to go up. All the guys on the TV are saying this is just a pullback, right? It's going to go a lot higher. And that's like boom. Next day the market gaps down. Oh, it's okay. I still made money. And then it start boom, 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 heading down. The herd is now panicking, right? So now we've got fear. So we've had hope on the way up, FOMO. We've got fear on the way down. I'm going to get eaten alive financially or in whatever way. So, what was, this is what happened. And where was the biggest mass fear in recent years? And who created it? The governments and the media with the pandemic. If you don't get that vaccination, if you don't get this, if you don't do that, it's suddenly like, how come? It's kind of like, oh, well, I talk to people, it's like, you, say in regards to the vaccination, it's like, well, it's there and the government says we have to get it. And it's like, they've only had it out 3 weeks. Usually it takes 10 years to prove a drug, but, well, it's all right. So this is the mass psychology. Do you see that? That sort of stuff?
Yep.
So what also happened, so the greed thing was once the hope came in on the way up, right? So you got the greed. It's like, as I said, you could get the house, you can get the car. Now you can get more than that. And that's the greed that kept you going in, and not it overcame the logic of you coming out. But on the way down, the fear came in, and it's the reverse of greed. It's kind of like it's inverse greed. It's like, shit, I'm losing so much money. Oh, sorry, excuse my language.
Yeah,
We
it's
watch our language on the
scarcity,
show.
right? It's this thought of
Exactly, it's
scarcity.
exactly that. So greed is the opposite of scarcity is the opposite of greed. So these are the three human emotions, and what they do is they get momentum by interacting. I.e., one person says this to another, to another, to another, and what we've got now is we've got global hope, fear, and greed, because as soon as breaking news breaks, it's, you'll know about an earthquake in California here in England within minutes, right? Seconds even, or a big event, a major geopolitical event, or anything. It just comes straight out. So that's it. So what is this? This is FOMO, it's greed, it's scarcity, human behavior.
And to that point, like media will often exploit it to the nth degree. I mean, they blow it way out of proportion. I mean, I've been in the Middle East when conflicts have arisen, and seen it on, I'm there, and I see it on the news, and I'm like, I'm actually there. Like, that's not at all what it looks like. Like, this is
Exactly,
not
right?
even remotely close to what is happening on the streets. But they blow it out of proportion so large.
Well, they have to, because the primary aim of media is to sell advertising, right?
Mm-hmm,
And
mm-hmm.
and to sell advertising and make money from that, they got to get clicks, they got to get viewers, they've got to get everything. So the more exciting you make it, the more people are going to follow that.
So just a couple of thoughts on, and I'll start with hope. And so I've been doing, some, reading, and there's a lot of smart people out there. The first one that kind of pops into my head is like Ray Dalio, who talks about, civil unrest or civil disruption. I'll avoid the word civil war because I think it's like, I don't think people can comprehend. I don't even know if I can comprehend that. But when you talk about hope, and and I think too, like we have had decades, generations here of really good times. I mean, the last kind of thing that I can think of that, at least if you're in North America, would have affected us would maybe be the Cold War, when there was the threat of nuclear arms, and they used to set the sirens off as practice drills, and you'd hide under your desk and all that kind of stuff. Like, that's going to help you. And so I mean, I was like, I was born in the 70s, so I was like, I'm tail end of that stuff. But and so I guess this maybe applies a little bit to the cycles, but I think more so I'm kind of looking for, your thoughts on, there's still a lot of hope. Like, there's some things, obviously there's conflict in Ukraine and Russia, and there's conflict in the Middle East right now, which seems to be growing. That's a little bit concerning. But and there's election stuff in the US, but I think there's also an underlying economic kind of disparity that's really growing, that I don't think people kind of, it's not tapping you on the forehead as harshly as maybe some of the other things. I'm just curious on this hope side of, and maybe how it applies to cycles, if there's anything that you see in the cycles that may lead to like this civil unrest, and what that might look like, and then how people might, consider that, and what their options are in the future.
The civil unrest stuff, that again, you got to put every cycle into context. And what I mean by that is we tend to look at each nation by itself, although we'll have a global map as well. So some of the unrest stuff really. Let me just bring in the global war cycles. I'm going to introduce one more cycle because otherwise people say, "Well, you're just making numbers up and throwing it out." And I can assure you, we're not. But there's an 82 to 84 year cycle which we found empirically, and it's a little bit of an interesting one. And that's the one that's associated with revolution as well as war and extremes of changes in activity.
Okay, sorry. What was that cycle? I didn't catch the number.
Yeah,
Sorry.
that's why I feel this is the. I'm getting to the more obscure ones. I mean, there's plenty more as well, but you have to put them in context. So, 82 to 84 years it averages,
82. Okay.
83. And what we see is that you know if we go back to the start of the Second World War, 1939, America came in 1941, and you add 82 to 84 years, you know, that takes us to the Ukraine situation, right? But if you take 1841, sorry, 1941, when America came in, and you add 82 to 84 years, you got 2023 to 2025. Okay, so this is a global war cycle, and you can take that same cycle back, and so you know the Second World War, all the major countries in the world. Go back, you get the Crimean War, okay, and that was France, Russia, Britain, and the Ottoman Empire, which were the major countries, the major players in the world at the time. You take that repetition back one more time, and you get all the beginnings of the American Revolution as America's growing, and Britain was the superpower at the time. So you get this pattern. But you can also apply the same pattern to America, and you can take it to 1776 and spin it out from there. And one cycle on from there takes you straight to the Civil War. The next cycle takes you to the war, and the next cycle comes in now. So the idea is that the American Civil War cycles are also coinciding with global war cycles as well. So this time, I think it's more about um, ideology, red versus blue, and so on. And when you look at when a certain so one of the things we also look at is when the states joined the union and so on, and what happened. And you'll see some of these states are coming up for critical challenge cycles. So it doesn't mean they're going to secede, but the talk of it's going to be there. So what we're saying is there's a degree of destabilization within America. Now, this 82 to 84 year cycle also right now coincides with the beginning of the Long March, which is when Mao Zedong really got the Communist Party getting its head of steam up in and taking China to where it is right now. So China is also in the rise here as well, you know, and this is how you interact all the cycles. So yeah, I think we're going to see a degree of unrest. What I would say for sure about America, there are parts of America now that are polarized. We've seen that. Um, I love America. I've been going there since the 1980s, and you know I've seen tremendous change. You know, I was in Seattle a few weeks ago, and the number of people that are out on the street sleeping rough, and people walking like zombies because of the drug problem there has gone up. You know, so you are seeing that degree of challenge there, and I've seen that in San Francisco. I was in LA last month and New York quite a bit. So you do see this. Is it the end of the empire or whatever? Maybe there's some challenge to it, but it doesn't. It's not the end. It's just this is the cycle, and we will come out of that cycle. You know, every nation will come out of its cycle. But here's the big thing I want to bring in is that the dollar really has been abused in that it just gets printed now after the Bretton Woods agreement was thrown out the window, where America agreed to keep the right amount of gold and everybody else would peg their currencies to it. De-dollarization is something now that is a challenge, and because the BRICS nations are now getting up some momentum. Okay, they're very diverse in their they're not culturally aligned. They're very different cultures, different monetary backgrounds. But if they start putting together a central bank digital currency backed by gold, and China has been collecting gold, has been buying in gold for the last 20 years,
Right.
then there's a problem. There's a threat. Saudi Arabia, is moving away from the dollar being the petrodollar. China is also moving into Brazil and Argentina. And one of the things that the previous administration put tariffs on China, including on soybeans, to hurt them. Well, it didn't hurt China. All they did was go to South America, get the cheap soybeans there, and add infrastructure to those countries as well. So you have to think about this. So this is all part of the big thing that's going on. The idea is that there is this change of power. There's a big change. There is a big, longer cycle of basically sovereignty and empires. And America's in that point of transition during this decade. So what we're seeing here is there is a threat to the dominance of America. China is potentially the threat, which is stating the obvious now, but this is something that's been creeping in for several years. Well, there's several reasons here. The West says democracy is a great thing, and we change every 4 years, 5 years in this nation or whatever. And one guy can come in and overturn everything with a load of executive orders in a day. Other nations have a 10-year plan, a 20-year plan, a 100-year plan, and then you wonder why they get so much momentum. So what's going on in the Middle East right now? I'm just going to be contentious now. I mean, one of my views is that if America, go back 50 years, America was squeezed very hard because it was a net importer of oil. America is now a net exporter. What's good for America right now would be high oil prices. How can you get high oil prices? Start a little bit of trouble or stir up a little bit of trouble in the Middle East. That then ensures the sovereignty of the dollar. Now, you can say that's bordering on conspiracy theory, but I wouldn't be surprised if that's part of the plan. What was in the news yesterday, day before? You know what? We're going to take out the Iranian oil fields. Okay. So what does that say? What else has happened? So I'm sorry, this is part of the geopolitical strategy, but I hope some of you are keeping up with this. What happened in Afghanistan, right? America pulled out. Which administration? There's an argument for one administration agreed it, another executed it, right?
Right.
The
Yeah.
point is they moved out. All right.
Yeah. Yeah.
What has that done? Who's straight in there? Who was already in there? And just a quick digression. What's the importance of Afghanistan? It has more rare earths than any other nation. And if you want to have EVs everywhere, by the way, there are not enough rare earths for us all to have EVs, electronic vehicles, everything. But China was already looking after the mines and so on. It's moved in big time. China is now only one country away from, across that part of Asia. It's only one nation away now from the Straits of Hormuz, which is where all the oil is. So this is kind of pretty disconcerting if you look at it in a big picture sense of view to the different nations. And I think people miss this because they're too busy on their iPhones watching TikTok, right? So
Yeah, I'm glad you made the point, because when you said, like, well, the U.S. could get drawn into a war here, and I was like, well, what would be the advantage for the U.S. or even Britain or anybody to get involved in that? But now that you mention the significance of the oil, and it I don't want to say it's a no-brainer, but it certainly would be pretty good cause to protect that.
Well, I think that's one of the things. It's the petrodollar is failing. The BRICS nations are getting momentum, and this is one way that it could be could buy America more breathing time. So it's America, the Western nations and so on. Yeah.
And how much of you brought it up, so I'll just ask the question about rare earth metals. How significant do you think those are towards the future, and does it apply to cycles? Is there a cycle that would indicate oil, the need for oil to reduce and rare earth metals to increase based on that technology?
Well, it's not just metals; it's minerals and things like lithium and
Sorry,
so
that's what I
on.
meant. Yeah, sorry, yeah.
Yeah. Well, I think this whole sustainability and eco thing is quite interesting. Um, at the Foundation for the Study of Cycles, where I sit on the board, we have a lot of climate data, and there are 10,000-year climate cycles, and we're part of that. So global warming, it's part of a cycle. I don't think we're actually exacerbating it much. I don't think man can do that. I mean, yeah, we do pump some stuff out, and that's a highly contentious statement. Uh, I don't. In answer to your question, I don't think the way we're going into this electric vehicle thing is the way forward. I think hydrogen is going to be the way forward.
Mm.
Okay, I think that's it. And we haven't got there yet. And I don't know why we haven't got there yet. Probably because there's not enough money in it for some of the multinationals. Because everybody has an agenda. There's very few organizations that are an altruistic path. It's all about how do we make a few bucks here and there.
Yeah.
We're on a capitalist business sort of podcast here,
Yeah,
right?
that's right.
That's us to some extent, but
You're preaching to the converted.
Advantage, right? That's it. Let's not beat about the bush, right, Dwayne?
Yeah, exactly.
So hydrogen I think is the way forward on that, but maybe there's not enough money in it yet.
Yeah, I mean, I think there's some evidence to that, and some actually, coincidentally, they were both pilots, but there's some evidence in that, and some flight things with the new eVTOLs and some of the technology that they're testing now, because battery obviously is too heavy, and really constrains flight. So they are actually moving towards some hydrogen. Before we move on to some, because I've been writing down these cycles, so there are a bunch of questions I won't have about cycles and some of the cycles you've mentioned, but we were talking about hope, fear, and greed. So I just wanted to circle back on fear. You'd talked about fear and the herd mentality, and everybody shifting to fear, and then resulting in scarcity. But what is your advice for people, regardless of whether it's the markets or whatever it is, but when they move into that fear mentality, whether it's in their business, because the market shifted, the government implemented something, whatever it is. But what is your advice based on your experience, especially with all your risk management experience, and um, in the areas of where you spend that we can't talk about, for the military and defense, but um, what's the best course of action? What's your advice in for people to manage fear, moving forward when they start to feel it and when things start to go negative? What's your thoughts on that?
It's almost altruistic. So people say, "Oh, this is not a good answer," but the true answer is, if you understand what lies ahead and you can see it objectively, you can be prepared for it. So the pandemic was one thing we briefed a lot of our clients for, and they were ready for that. Okay, some people pivoted on their businesses knowing that if people disappear, they'd already locked it down and looked, cashed out or whatever. Not everybody could do that. So if you know what's coming up, the emotional side does not kick in. So, and remember, see, all this hope, fear, and greed. I'll answer a bit more of that question in a minute. Hope, fear, and greed. It's all based on primal responses, right? And this thing called the chimp response, which is this immediate reaction of fight or flight, right? Because that's what these things are. Hope, fear, and greed are fight or flight. Certainly, fear and greed are, sorry, yeah, they're kind of fight or flight type things. That's the whole thing. So, one of the things, there's been a lot of research done on this, and they talk about the first reaction is the chimp, and you've got to cage the chimp or box the chimp. And this is what airline pilots do. When something goes wrong, uh, actually, okay, what's your first reaction? It's a startle, okay? And, you'll have experienced this,
Yep,
with,
too many
yeah.
times.
So the idea is, if you know you're going to be startled, you're going to be startled and you're not expecting it. So you think, actually, I just got startled. So that's the first thing. There's a higher degree of recognition of where you're at. And it's like, I need to take the autopilot out. I need to do this. No, you don't need to take the autopilot. Let's figure out what's going on, right? What is that thing doing? Well, what are we going to do? In aviation, we aviate, then navigate, then communicate. So something's gone wrong. We've got to keep the plane flying. We've got to keep it, making sure we're not flying into a mountain. And then we've got to tell somebody, all right, or do something. So it's the same thing. Something happens, a pandemic comes out. Did you keep aviating your business or your pathway or whatever? Did you see the navigational path? And one of the things was, I remember at the beginning of it was like, oh, this could last 10 years. This could wipe out most of the population. It's like, well, BS, like, yeah, people will die, but they don't all get wiped out. And actually, no pandemic lasted more than 3.5 years historically. So we know, as a mean, 3.5 years, you could focus on that. And so this whole idea of managing your emotions is about, if you have an idea of what lies ahead, you know, uh, then you've got a good idea of, if you've got a map. It's like if you go whitewater rafting, right? You generally have a good idea of what's downstream. You're going to have a bit of fun, but you didn't get on a whitewater raft and realize everything's getting bouncier and bouncier, and then holy crap, there's the Niagara Falls, we're done for. As you go over the top of that. Now I know people have gone over the top of it and survived, but if you'd want to have a map of where you're heading, right? And I think that's the whole point. That's what cycles do. They provide you with a map. So by the same count, certainly some, well, I'm thinking of a couple of my clients, major operations, hedge funds. We talk about, well, what lies ahead, and we're seeing it now. The civil unrest cycles, uh, the war cycles. So things like the stocks like General Dynamics they got into a while back, and big, people like that, Boeing, well, not actually, Boeing's a bad example, but anything that was related to defense industries, gun industries, and all that sort of thing. So yeah, you can say, well, that's terrible. You're taking advantage of everything. It's like, no, we're just reading the map. That's it. That's what we see. Um, and remember, it's not all bad news. There's good news follows bad news, and bad news follows good news. There's a new cycle, and things will change. That's it.
You kind of reminded me of a couple of things, which is, one, I try not to look at risk versus reward. I look at risk versus probability. What's the probability of something happening in your business or in your life or with your health or whatever? And to your point, and the reason why I thought of the probability piece was, what is your plan? Do you have any plans in place for things to go sideways? Like, so, I think what you're doing here with cycles and being able to understand markets and how you phrased it, I thought was amazing, which was really it's about human behavior. This is like, these cycles seem to me to drive human behavior. For example, like, we talked about, what could be happening in the US, which is, you made some extremely good points about, and we're seeing it a lot in Canada as well. This is not just to the US, but I've never seen so much homelessness in the history of my life. Homelessness seems to be, it's becoming an epidemic. Um, and a lot of that had to do with inflation and, the high cost of food and living and et cetera. And it puts people out in their homes um, and drugs, that's, the dependency on drugs and the opioid crises and stuff like that. It's just, it doesn't have to be about civil unrest. It could be about, that's an example of civil unrest. So what is your plan for that kind of stuff?
Well, I think you got to look after your own stuff, right? But so just let's, one of the things I wrote about in 2016 as a precursor to Zero Hour. Well, we didn't know we were going to write Zero Hour, but I happened to meet Harry Dent and became very big friends, and we did collaborate on this book. It was this idea that the phrase I'd coined was that we're going from globalization to polarization, and that really began in 2016 with Britain and Brexit. Everything had been coming together. All the countries were uniting. Everybody wanted to be in the euro. Britain has always kept the pound, which has been a great thing, I think, relatively. And we're the first to leave. America saw the arrival of Donald Trump, a slightly different sort of persona, a polarizing persona. So we saw the end of globalization. We saw the beginning of polarization. And we're in a polarization phase now. And it's going to go on for a while. It's probably going to go on for another decade, at least into the early 2030s. What can you do? You just got to be aware of stuff, really. And it's sad. What can you influence? Well, yeah, we can do contribution projects and help people, but really it's about educating people. But there's somebody else out there that's hell bent on making sure these people do get addicted to these things and so on. So it's a difficult thing, and I don't really know what the answer to that particular thing is, Dwayne. That's a really great question, but just be aware that it's there.
Yeah, and I think too, awareness of the reaction, because when you were making a comment, and I was thinking about, like, and I'd be interested in having this conversation. I don't know. Hopefully, the listeners find it interesting, but it's certainly interesting to me. But
It's fun
but
anyway.
but you mentioned it earlier. Like, Tennille and I are new helicopter pilots. I've been a fixed wing pilot since 2006 or whatever it's been. But we got caught in some wind shear ahead of a storm. Completely my fault. But we get caught in some wind shear. Anyways, we get through it. It was not a fun ride. But we got through it, no problem.
Right.
Obviously, I'm here to have this interview, so it worked out okay. But the post conversation with her and I was, my shared experience with her was the realization of when you get into a crisis environment, and most people don't ever get in that, they would maybe experience it in a car accident, like where they slip on a black ice or something like that. But one of the post analysis of for her and I said, like, my experience was that all of a sudden, like, my vision just got so narrow. Like, it was crazy how narrow. And you read about, like, and I think it's the pupils of your eyes start to contract or something with your blood. And you probably know this, but I just noticed, like, there was really, like, I could only focus on one dial at a time. And it was very hard for me to really start to get my eyes. We've had a couple of incidences over my flying career where you really got to work hard at widening the eyes and being able to see the bigger picture, but knowing what is going to come when you're confronted with some type of crisis, which is a good example was the pandemic. People didn't know what to do. They couldn't see the forest for the trees. They couldn't diagnose what they saw the problem, made it bigger than it was. I just maybe hand that over to you and see what your thoughts are.
You know what? This is a lot of people watching this podcast are very much into personal development. That's how we met as well. So what you are talking about there, and it's something we are acutely aware of as airline pilots and instructors, and in my role as I did 20 years as a senior standards captain, is a thing called the capacity bucket. Now, we're going to talk about this right now as aviators, but for those of you watching, I want you to think about this in your life as well. So capacity bucket is the amount of spare thinking power you've got. And when that capacity bucket fills up, you're going to get tunnel vision. It's going to close in. So I like that. You're going to be able to focus less and less on the periphery, and you're going to be able to focus less and less on fulfilling tasks. So the ability to recognize your capacity bucket filling up is a very important thing. And if we just take this out of aviation for a minute, think about your own capacity buckets. So what happened in the pandemic? Did your capacity bucket fill up? What's in your capacity bucket? Well, when we go and fly a plane, a helicopter, a big jet, whatever, we're going to come in and we're going to keep that capacity bucket as empty as possible. What can we get out of the way straight away? What do we know? Do we know the weather at every single alternate? Do we know what the weather's going to be like at New York or Toronto or Hong Kong? So the more we're aware, the more capacity we have. It's the same with your life. Just let's put this into business. What's going on in your health, your relationships? What's the stress level at home? What's the stress level at work? How full is your capacity bucket? Because when that fills up, you can't do anything. You get tunnel vision. So it's all about situational awareness, right? If you know what's going on around you, we use situation. You'll know this as a pilot. Situational awareness comes in a lot. And this is exactly what I say cycles are all about. They're about situational awareness. The pandemic was a black swan. Bullshit. We knew it was coming, right? The Israeli, the Middle East situation with Israel, we knew it was coming. The cycles were. We didn't know if it was going to happen for sure, but like clockwork to the day that cycle came out, and we've got the escalation to the week this time. So it's all about managing capacity. And when you're flying an airplane, you want to have as much capacity. So when you start getting this tunnel vision, you want to be able to expand that again and be able to see the other instruments. So knowing when you're getting overloaded, if you're going to go in and fly a plane when you've already got, you're not feeling 100%. You might have got some indigestion. You might have got a headache. You might have just had an argument with the family. You might have had that lawyer or the tax guy on your back. It's probably not a good day to go flying. And it's the same thing with your business. How busy are you right now? Right. And it's like, do you have the capacity to talk about the next acquisition, merger, or product launch? Or should you just pull back? And then, one of our mutual mentors always asks, what is it I'm not seeing? Right. Keith Cunningham, let's credit him. Keith Cunningham. What is it I'm not seeing? He says he had it written in front of his desk. It's written right ahead there for me as well. What is it I'm not seeing? And he talked about that when you buy a business. I ask that when we're flying airplanes, when we're flying big jets around. I ask that when I'm looking, at a market. What is it I'm not seeing? So the idea is that if you can identify what the threat is, you've increased your situational awareness, and therefore you've reduced the capacity of your work, you've reduced the contents of your capacity bucket. So that actually is in any sort of entrepreneurial area is a valuable tool. The ability to self-analyze and see how full your capacity bucket is.